The effort to regulate the internet, specifically in the United States, has been going on for years. Under the Obama administration, they called it the driver's license for the internet. The idea is to have a government-issued ID be necessary for you to access the internet. And in doing so, they know not just what you're posting and saying online, they know what information you're reading online as well. But the difference is, once it's directly connected to a government-issued ID, they could prosecute you for things like publishing misinformation and all of that. And there's actually been pushes from people like former Google CEO Eric Schmidt to punish people who publish alleged disinformation, and that the need that it's necessary to have IDs connected to social media accounts and to people's internet access as a means of facilitating those kinds of arrests or, law enforcement activity.
In this recent discussion on Big Picture with James Patrick, Whitney Webb explores the rise of central bank digital currencies, CBDCs, and how blockchain and decentralization could reshape global financial systems. She also examines the control mechanisms emerging behind digital currencies. At the time of this discussion, Bitcoin is trading around $66,000, showing a 1% increase in the last 24 hours and a 4% increase over the past 7 days. Before we dive in, don't forget to like, subscribe, and share the channel. Now let's hear more from Whitney Webb.
That nature, and also we have to know who everybody online is, or we have to know who everybody is interacting with these systems. We need digital ID. I think it's quite clear that the way to force onboarding of a CBDC or this type of digital currency system is going to be some sort of crisis, some sort of event. I think the immigration crises, any sort of refugee situation, that's going to be used to push for digital IDs. I think it's just a very easy excuse for them, a way for them to quickly manufacture consent, because, all these people, we don't know who they are. They could be criminals, they could be anybody. We have to know who everybody is. And it's going to be sold as a way to provide security to the insecurity created by the migrant crisis. So I think there's been growing awareness for some time that there's a lot of bipartisan consensus about most of the policies of the US government, like endless war, for example. And some people refer to it as the uniparty. But people also forget that too. And so what a lot of people call this the two-party model, people refer to it sometimes as the left-right paradigm. But I think not a lot of people truly understand how that paradigm works. If you think about it as the left hand and right hand of the establishment, you'll have one of those hands create a problem intentionally, and then the opposing hand comes in and offers the solution. But the solution was always what the establishment wanted, but it's sold as a solution to a problem created by the other side. So it creates the illusion that the opposing force solved a problem, but in reality the problem was manufactured by one hand of the system, and then the solution was offered by the other hand. The man that claims to have created CBDCs is a man from Barbados named Oliver Gale. He created one of the first, arguably the first CBDC project in the Caribbean, and then went on to have a key role in creating the Nigerian CBDC, the e-Naira. So the way the CBDC in Nigeria was set up is that in order to access the CBDC, you have to have a national identification number, which is the Nigerian Digital ID project. So you have to have a digital ID in order to be able to access the Nigerian CBDC. And the way they tried to get people to onboard to the CBD system was by essentially cutting off the vast majority of the cash in circulation in Nigeria. And so despite the fact that they created these conditions to coerce people into using the CBDC, the populace resists. And that suggests that the idea of CBDCs being a tool for financial inclusion, the public doesn't seem to believe that, right? In Nigeria, these people that ostensibly suffer from this identity gap, that suffer from financial exclusion, don't want the financial inclusion that they're being offered by the CBDC. They don't see any real benefit. They see it as a tool of the state. And the state in Nigeria and in other African countries where these sort of systems are being rolled out, the governments have abused these systems to go after journalists or other people. and violate human rights and all sorts of things. So it's not a tool for increased human rights. It's not a tool for increased inclusion. It's inherently exclusionary. And
as we just heard Whitney Webb discuss the global push for CBDCs and their potential impact on privacy and financial independence, now let's hear them discuss more on the role of blockchain and how it can create an alternative decentralized financial system. Whitney also explains the underlying motives for centralized digital currency control and its far-reaching effects on financial autonomy. Now let's listen to what Whitney Webb has to say.
Well, there's a couple of reasons why I think they'd want to have private banks have like a major role in this digital currency system to come. If there's a private sector entity banking you and managing your money, it's much easier for them to bank you than the federal government. So for example, if the Federal Reserve were to do a direct issue CBDC, it would be harder for them to freeze someone's bank account or debank them in any sort of significant way, as opposed to a private company where you have, for example, precedents where JP Morgan Chase, for example, debanked Dr. Mercola and some of his executives and didn't give any reason as to why. They just said, we can no longer provide you with financial services, no questions asked. That would be very hard to do in the case of a direct issued CBDC. This is something similar to the argument that's been made for social media companies censoring. They say, oh, but they're private companies, so they can restrict speech however they want. But we know now that their restrictions on private speech have been a result of public sector pressure, right? So again, people need to keep in mind that this is a public-private partnership. That's the prevailing model in the United States. The digital dollar in the United States is also going to be a public-private model. You'll have the Fed, the central bank, working with the private banks that own the Fed in the United States. And that will be the partnership between them will be the system. It's not going to be all public. It's not going to be all private. It is a partnership. If the Fed were to do a direct issued CBDC, it would take them a few years to design, experiment, and deploy it. If you're using these existing dollar-peg stablecoins, those are already here. They're already on blockchains. And a lot of those phases that would take the Fed a few years have already been accomplished if you choose to use those. And if you regulate them so that they have to, for example, keep their reserves at the Fed, then you're able to sort of have the same kind of system, but you don't have to go through the process of creating a direct issued CBDC. China, for example, they already have their CBDC, so the US is behind. So to remain competitive, they say, and have a first mover advantage, we should go with the digital dollars that are already here. So that's dollar-peg stablecoins. The banks that are involved in this new system, it's very unlikely it's going to be the existing banks we have in the US right now. And that's because just like in 2008 and more recently with the Silicon Valley banking crisis, every time there's a major financial crisis, there seems to be a major bank consolidation wave. And you have Janet Yellen, the Treasury Secretary, saying during the Silicon Valley bank crisis, in front of Congress, that they are essentially only going to rescue systemically important banks, which is a designator that Yellen can just, she essentially decides who's a bank worth saving and who's not. And this is sort of the perpetuation of the too big to fail model that we heard about in 2008. So one indication the system is being rolled out in this way is looking at the people developing the infrastructure and what type of digital currencies they're supporting. So one of the biggest developers right now of CBDCs is...
Could digital IDs and CBDCs combine to establish financial control? We'd love to hear your thoughts on a few questions. How do you think stablecoins might impact decentralized finance? If you enjoyed this discussion, please like, subscribe, and share our video for more insights into the evolving world of decentralized finance and technology.